more day, friends. It's Thursday, and happy Thursday from Yahoo Finance's New York City headquarters studios. I'm Yahoo Finance executive editor Brian Sazzi. You're watching Energy Vault Holdings ringing the opening bell at the New York Stock Exchange. Forbes getting trading underway over at the NASDAQ. It has been another earnings-heavy morning for investors to wade through. Tesla CEO Elon Musk is promising more robots that look like actual humans. Fascinating stuff. Hasbro and T-Mobile raising their outlooks because the U.S. consumer hasn't went into hiding ... just yet. But IBM letting down the street with its software sales performance in the third quarter. To say there are many different themes emerging from earnings season is an understatement. Let's get down to the NASDAQ now and check in with our very own Allie Canal to see what's hot in the markets. Allie.
Hi, Sazzi. Well, it looks like a mixed picture right now at the open, but pretty much flat. Searching for direction at this point. All three majors trading just above the flat line or just under the flat line with the Dow. You'll see just flipped into the green here. And this comes as investors are continuing to digest a slew of earnings reports from some of those major companies. So you were talking about Tesla, and we're seeing shares under pressure this morning, opening up about 4% lower. Now, this comes after the company reported mixed third quarter results, strong revenue, but earnings missed expectations and fell year over year. So investors clearly wanted a little bit more here. Now, this report officially kicks off earnings season for the Magnificent Seven tech giants, which we'll be watching very closely. Now, shares of IBM also weighing on sentiment, opening down roughly 6%. And this comes after its own latest results. Profit topped expectations, but software revenue came in only in line, disappointing investors looking for softer growth. And then on the macro front, I want to take a look at oil prices and what we're seeing there, because we have Brent crude up around 4%, trading at just around $65 a barrel. You are going to see crude oil up as well, 5%, just around $61 a barrel. And this comes after the U.S. slapped new sanctions on Russia's major energy producers, adding new pressure on President Putin amid the ongoing war in Ukraine. So a lot for investors to digest this morning. We do have Intel earnings on deck after the bell today. Another key read on broader tech and AI spending, Brian.
That is going to be one ugly report from Intel. I just feel it and I just know it. Allie, thanks so much. Appreciate it. All right, new day of earnings season. Madness is well underway. I have to start with Tesla and CEO Elon Musk. Stock is getting unplugged as tariffs clip profits. But the stock reaction masked some interesting positive on the earnings call last night. Musk says Tesla is pushing forward with aggressive rollouts of robo-taxis and robots in 2026. Tesla bull Dan Ives saying this morning the company could be worth more than $2 trillion by the early part of next year if these efforts prove successful. Aside from Tesla, earnings have come in pretty well. Toy maker Hasbro lifted its full-year sales outlook as demand trends have improved ahead of the holidays, the CEO just said moments ago in the earnings call. T-Mobile hiked its outlook on the back of brisk demand for the latest Apple iPhone. Lots to pick apart here. Here on the opening bid roundtable to break all this stuff down, Breakout Capital Chairman and Managing Member Thomas Hayes and Yahoo Finance Senior Reporters Allie Canal and Inez Ferre. Thomas, start with you. What has impressed you with earnings season so far?
Well, I think everything outside the Mag 7 is doing okay. We've had 8.5% earnings growth versus 8% expected, with maybe 15, a little bit more than 15, 20% of the S&P reporting. I think the big key is going to be next week with the serious Mag 7 earnings. You know, Warren Buffett once said the three most important words in investing are margin of safety. And with the Magnificent Seven, there is no margin of safety. They're trading at 30 times earnings, despite earnings growth falling in half year on year from 32% down to 14%. So far the themes with Netflix and Tesla have been what? Have been margin compression. And they're not even the biggest spenders in AI. We're going to see the biggest spenders in AI next week, and I think that we've raised a little cash, and I've been accused by some of your colleagues, Brian, by being a perma bull, and that's been the case, and that's been right. But in October, we got cautious and we raised some cash, and I think we want to have some cash through next week as we see a lot of spending and a lot of margin contraction in Mag 7.
Tom, to be clear, I never said that. All right, I just want that to be known on the opening bid roundtable. Let me fire back at you because you bring up a good point. These earnings are squashing estimates by and large. We're seeing a lot of companies like T-Mobile, Hasbro raise their outlooks today. They have not been alone, but profit margins have been under pressure. Tariffs, rising costs, you name it. Margins not for a lot of companies have been down year over year. Is the market just too excited by these earnings beats and they need to pay more attention to some of these fundamentals that may not be as strong as these earnings beats look like?
Yeah, look, I think we have to be a little cautious here. In years that the market corrects more than 15%, there's often a secondary correction, particularly after it hits all-time highs. So we corrected almost 20% in April. We went back to new highs. On average, the secondary correction is 3 to 9%. It averages 6.4%. It would not surprise me in coming weeks to see a little bit more chop and volatility before we finally get the year-end rally. And I think the catalyst, look, we are whistling by the graveyard a little bit. We got no deal with the shutdown so far. We've got no deal with China. We've got some open geopolitical questions, and we have a consistent theme of margin contraction with record high multiples. So that's the bad news. The good news is earnings are going to grow meaningfully next year, up double digits. But I think in the interim, I think people are going to be surprised how much this spending is weighing. And you saw Facebook or Meta lay off a bunch of people in their AI department. I thought that's where the growth was supposed to be.
Fair point. And Naz, let me get over to you because I know our audience is probably saying, I wish Sazi would just shut the hell up about earnings. I want to focus in on Tesla. As you went through this Tesla earnings report, Inez, do you think of Tesla more as a car company or an AI company? It's a very important question we've asked in the past, but I would say now it's more important than ever before. I mean, they're rolling out robots, cars with no steering wheels. This is a fundamental change in the investment thesis in Tesla.
Yes, and Elon Musk in his opening remarks also, when he talked about Tesla, he really talked about AI, basically saying that Tesla is going to bring AI into the real world. So he is looking at Tesla as an AI company, and the company is clearly signaling that they are an AI play, that they are going into the humanoid robots and robo-taxis. And so that was the big focus during their earnings call. That's what struck me. I mean, we've seen this shift, but really last night you saw it even more. This is a what's next stock. And it is, and you're seeing that the stock is under pressure, perhaps because of the sort of margin squeeze, because of the earnings miss, because of perhaps the robo-taxi that safety drivers in Austin aren't going to be out of those until the end of the year. Maybe the progress was expected a little bit faster with respect to that, but it's definitely a what's next stock.
Ali, I know I'm supposed to be skeptical of companies and leaders, but I am getting more excited about these robots. I think there could be some real potential, and I think the Tesla robot, what is it, Optimus, this version 3 that Elon teased last night, it's far and away the leader in this space.
Yeah, and Wall Street strategists that are bullish on this stock would agree with you. I mean, Dan Ives described it as the next era for Tesla. It's all about these robots. It's all about AI. But I agree with Inez that it truly is a show me story. What's next? What's coming down the pike? And for Tesla, I mean, what's making money right now or is trying to make money is the car business. We're not seeing profits on the AI side. We're not at the point that we're seeing those returns. So investors are going to have to be patient. Clearly, given the results that we're seeing this morning, they're not so patient right now. They want to make sure that the expiration of those EV tax credits, that's not going to be a problem moving forward when you have these more grander ideas with AI and robots, especially since we know how difficult it is to make money in that space. So look, all these companies right now, if you can touch AI, if you can incorporate that into your business, that's a good thing. We know AI isn't going anywhere anytime soon, but it's a question of how long investors can wait around to see some of those returns.
Tom, I know you're a perma bull. Hit me with some picks. I heard you're showing up here on the round table with some picks for us.
Yeah, absolutely. One thing that no one's really been paying attention to because everyone's been very skeptical about small caps. But if you look at small cap performance relative to large caps, it's dramatically outperformed since August of this year. So while everyone's been focused on Mag 7, what's actually outperformed in the last handful of months is small caps. So we got two great small caps for you. We brought on your show or on your network in the last little while, and they continue to go up, and they're going to continue to go up. One is a boring business, not trading at 200 times earnings like Tesla or 13 times revenue, actually much more realistic multiples. It's called Cooper Standard. They do the sealing systems around the doors and windows of automobiles and fluid transfer systems. This stock was down from $146 down to $5 when we started buying it in 2022. It subsequently dropped to $3.5. We bought more, and now it's at $35, $36. So six-bagger, but probably going to triple again from here over the next 3 years. And why is that? When it was $146, it was earning $7.20 on 17.5 million U.S. sell-through. They provide to U.S. OEMs like Ford, like GM, et cetera. It's a play on the recovery in auto volumes. We think they've taken about $400 or $500 million of costs out of the business. They're going to earn $10 a share at the top of the next cycle when we get back over 17 million cars. And depends what multiple you put on it. At 10 times, it's a $100 stock. If you go back to a 20 times multiple, it could be a lot higher. We like Cooper Standard.
Yeah. Inez, don't you always, aren't you amazed how guys like Tom find stocks like this? I got a lot of stocks in my head. This is what I've been doing for a while. I've never heard of this company.
I had never either, and this is why we love having Tom on, because he brings these stock picks that nobody had ever heard of. But listen, there is a stock for everyone and for everyone's interest.
So, Tom, go. Floor's yours.
I got one more. Canada Goose. It's
okay. I've heard Canada
about
Goose. I got a couple of their coats, but make your case.
It's not just about the $1,000 parkas anymore. They're doing 365 wear, from T-shirts to hats to eyewear to footwear. And you've seen it very successfully executed in other brands. They have record free cash flow and record revenues. And yet the stock is still down 80% from its COVID highs. The board recently rejected an offer for $14 a share to buy the company. Thank God they rejected that, because they would have stolen all the upside. And these are the type of divergences that we built our career on, when fundamentals are improving and the stock is down. Sooner or later, in the short term, the market is emotional voting machine based on emotions. In the long term, it's a weighing machine based on fundamentals. This stock price will catch up with the growing fundamentals.
Fair point. I just want to clarify. I bought my Canada Goose 2 coats on sale. I don't want people out there to think I'm some kind of rich TV person. That's not the case. Tom, I can't afford their clothes. The clothes are too expensive.
Well, you can get a T-shirt for $70. It's going to look incredible on you. Everyone's going to say how handsome you are walking around Bryant Park with your Canada Goose T-shirt.
Well, you know what? That's going to be $70 well spent. All right, good to see you all here. Tom, thanks for those free stock picks. Appreciate it. Have a good weekend.
Thank you.
Coming up, investors not hailing Uber stock, and Hasbro CEO Chris Cox stops by after his company's better than expected quarter and outlook. 'Tis almost a season for toy shopping. I'm pumped. Welcome back to Opening Bid. Somewhat under the radar, Uber stock has run out of gas this fall. Shares are off by 7% in the past month alone. Sell-off reflects mostly concerns on rising competition. Anyone from Waymo saying recently it will launch autonomous ride-hailing in London in the new year, to Tesla making clear advances with its robo-taxi strategy, as we were reminded of by Elon Musk on his earnings call last night. Guggenheim analyst Taylor Manley is out defending Uber into its November 4th earnings release, though while Manley shares concerns on rising competition, like I just mentioned, Uber's business likely stayed strong in the third quarter, which the street may be overlooking. You can see that on the charts we are showing right now from Manley and the Guggenheim team. Interesting stuff over there. All right, Hasbro is out with better than expected third quarter earnings. The Play-Doh and Nerf maker also raised its full year sales outlook to a high single-digit percentage growth rate from mid-single digits previously. Similar to what we heard from rival Mattel this week, Hasbro calling out accelerating sales trends ahead of the all-important holiday shopping season. Fresh off his earnings call, I was just listening to it, so I know it was just going on, is Hasbro CEO Chris Cox. Chris, always great to see you. I got to say, you get the award for best CEO office in the game, my friend. Good to see you here. What really stood out to me on this earnings call, Chris, and I think you brought up a good point, you were seeing a tale of two consumers right now. Take us through that.
Sure. I mean, I think like a top 20% of households in the U.S. by income, they're feeling pretty good. Stock market's way up, Bitcoin's way up. They tend to be pretty price inelastic, and they're leaning in and buying things that they love. That segment of consumers generates roughly 60% of discretionary consumer spending. That's pretty consistent with what we estimate in terms of what it drives for our business. And we have a robust business with them, with Magic cards, collectibles, high-end figurines, you name it, board games, you name it. The balance of consumers and families, they're pinching their pennies a little bit. They're watching their pocketbooks. We have a great portfolio for them. Roughly 50% of all the items that we sell is under the $20 price point. We're leaning into alternate suppliers and new products to create even more breakthrough opportunities at the checkout aisle and, new kinds of distribution. But they're a little bit more price sensitive, a little bit more promotional sensitive. And I think we have a playbook for responding to them as well, which I think we're seeing in our results.
Chris, I love that you mentioned Bitcoin. That's good stuff right there. I heard on the call that sales or point of sale, or POS as you guys call it, have accelerated the past 6 to 8 weeks. Where are you seeing that strength, and what does that indicate for the holiday season?
It's pretty broad-based for us. Action figures in particular has been pretty strong. Marvel is just having a great year this year. They have a fantastic content slate that I think is only going to get better. Our board game business has seen some nice sequential improvement as well. We're seeing preschool improve as well as like our fashion categories improve. So generally speaking, everything's either kind of up, or if it was down, it's down less, which is a great sign for the holidays. Generally speaking, the trends that we see inside of back to school and in early October, they tend to prevail into the holiday season. So I think that means that the consumers are leaning in. For the collector, they're buying for themselves. They're leaning into what they love. And for families, they're prioritizing their kids. They're prioritizing great gifts. And, fortunately, we think we have a pretty nice selection for them.
Cool stat you guys provided on the call. 50% of your portfolio is priced under $20. How have you been able to keep those price points in a year where tariffs have just caused a major reset for the toy supply chain?
Well, toys tends to be a category that favors under $20 and under $10. We've always had, an emphasis there. We've been working with our supply chain on driving a lot of cost savings out of our system. We're on the record of saying we want to get to $1 billion of overall cost savings by 2027. I think we're well on our way on that. And our supply chain is really doing the lion's share of work on that. And so what we've been trying to do is we've been trying to take that cost saving and pass it on to the consumer in terms of better value. And I think what you're seeing, particularly over the last 6 or 7 weeks, as some of those initiatives are hitting the mark, as they're starting to show up on shelf, our POS is improving and our share is improving in those core categories. And, knock on wood, those trends will continue into this quarter. And then as we look to 2026, with just the content lineup that we have kind of backing up the innovation and the value, we've got 4 blockbuster movies from the Walt Disney Company coming out, like Toy Story 5, which is always great for Potato Head, Spider-Man, The Mandalorian and Grogu, and then a new Avengers film. That I think augurs that the momentum's going to continue.
But you've had to, on the part of the portfolio not priced under 20, you've had to raise prices, right? I mean, you're a publicly traded toy maker. I mean, you have to make profits on this stuff, even with tariffs.
For sure. Yeah, we've been pretty selective though to date. We've made some choices in product lines that tend to be more fan-oriented, so they tend to be higher priced already. And also things that have pretty robust content and kind of latent brand momentum behind them. And then I think we've been smart about like mix shifting and just adding value to different products and different bundles and promotions we're doing with our retailers. Part of what's underscoring kind of the raise that we announced for this quarter for the balance of the year is our retailers are appreciating the value that we're providing the consumer, kind of the targeted nature that we're trying to address price points. And so we just have more promotional opportunities and more shelf slots as a result.
Chris, I've told you this before. I really think investors need to start thinking about Hasbro more as a gaming company first than someone putting out plastic toys that go into Target and Walmart. And you proved that out again with Magic in this quarter. Talk to me about this Exodus video game you're dropping next year. How big could this get, and what are your plans in the gaming space?
Well, Exodus is a new sci-fi RPG by a studio called Archetype Entertainment. We think it's going to be a real great game, consistent in the quality levels that you've seen from previous games from partners that we've had, like Larian with Baldur's Gate 3. We're going to be quality focused on it. We'll have more to share at the Game Awards. I don't want to give too much away to investors before we have a chance to talk to fans, but we're going to be quality focused. We're still targeting the back half of 2026. And we think it's going to be the start of a new franchise for Hasbro. And then more broadly than just beyond Exodus, I think you're right, Brian. Hasbro is really a play company, and we've got three legs to our stool. We've got games which have been absolutely on fire, supported by blockbusters like Magic the Gathering, which is up, over 40% year to date. We've got a licensing business that's super high profit. It's up over 60% over the last 3 years, with mega hits like Monopoly Go and a location-based entertainment business that's only second to the Walt Disney Company in terms of the number of visitors we have. And then we have a toy business, which is in the late stages of a turnaround. I think you're starting to see that turnaround's working. We're getting back to growth, and I think that growth is going to continue. And then what I think digital games is going to do is it's going to add a fourth leg to that stool in the highest growth, most lucrative aspect of play, which is video games. And so we'll be doing that with our own games, we'll be doing that with licensed games, and we'll be doing that with collaborations and partnerships that we'll share more about over the next couple months.
Chris, lastly, before I let you go, this week, key news, you are the global co-licensee with Mattel on K-pop Demon Hunters. Is that product line, will that be an earnings needle mover for a company like yours?
Oh, for sure. I think it's a long-term partnership. It's a deal that doesn't just span a year, it spans multiple years and hopefully multiple content releases from Netflix. We have our first product coming out this year with a Monopoly deal themed after K-pop. Maybe we'll have a couple previews of some fan-oriented items. I think you'll really start to see product hit, though, in kind of the late spring period of 2026, and then really start to ramp and grow in 27 and 28. K-pop's a phenomenon. It dominates Spotify top 10 lists in terms of downloads. I think it's been in the top 5 movies of Netflix since its release 4 or 5 months ago. We're excited to be working with them, and we're working with them across a wide selection of toys. We're going to do everything from plush to electronic to role-playing to games to trading card games. So it's going to be a pretty full-featured assortment that Hasbro is going to offer, augmented by all the great dolls and figurines that Mattel will offer as well.
Well, good to see that turnaround continuing. Good luck with the start of the holiday season, Chris. We'll talk to you soon.
Thanks, Brian.
All right, coming up, the earnings season analysis rolls right along. Julie Hyman has you covered on Market Catalyst. We'll be right back.